what do you expect to happen on the iron ore front, especially in light of what's going on in China and the expectations for steel output cuts? You know, we got the economic data today, which, yeah, okay, at the headline level better than expected, but still definitely not out of the woods.
Yeah, I mean, Mandy, there's a lot of debate going on between two camps. The bulls say there's going to be a big stimulus plan coming out of China once they move from lockdowns. The other side of the camp, we're seeing Chinese steel prices come down, rebar prices coming down, output from the Chinese steel mills looking weaker towards the back end of the year. So unless we do see a big stimulus plan coming through here, I think a lot of the bulls are banking on that. Current prices suggesting there's going to be a stimulus plan, but if that doesn't come through, or comes through to a much lesser extent than people expected, we're going to see iron ore starting to push down. There's new production coming back on, production being normalised out of Brazil, out of Vale. Looking further ahead, 25, we might see Simandou coming on. There's a lot of supply coming down. And if we don't see that stimulus plan in China, we're going to see sort of an imbalance between demand and supply. I think that the next level is a level down for the iron ore price. Some of the Australian miners are quite helpful for it is that a lot of their costs are in Australian dollars, but they take their revenues in US dollars. Since the RBA decision last week on the 7th, and the Aussie dollar's come off 4.5%, so that's a bit of an offset for the Aussie iron ore, a bit of sunshine going on there.
Yeah, I was actually going to ask you about that because most of their cost base was priced in at around about that 77-cent mark. We're looking right now at 69.15. So does that mean that there's potentially a little bit of uplift or uplift surprise when we do get their results coming through in August? Because we've had a pretty solid run of it being a lot below that 77, and at the same time, you've got all these companies around the world suggesting all these FX headwinds, and the miners should be the big winners here.
Yeah, absolutely. Well, I mean, their biggest costs that have both energy and particularly wages are in Aussie dollars. A lot of this, so this is a bit of a bright spot. This part of the reason why you own some of these Aussie miners is because they have that they collect their revenue in US dollars, iron and the minerals all being priced in US dollars, and their costs and taxes are paid in Aussie dollars. So yeah, that's a bit of a good news story, and good news for a lot of Aussie companies that have offshore operations. So whilst there's been a bit of bad news in the share market for the last sort of week and a half, if you have stable revenues earned outside of Australia, you've had a 4.5% increase in the translation impact of those revenues.